Well, it is just after 10, so I'm going to go ahead and get started. Welcome to Tax Tuesday, the first Tuesday of every month. And I am going to just jump in. So my name is Heather Ryan, and I'm also known as the Tax Queen. I'm the owner of Tax Queen, and I support digital nomads, RVers, entrepreneurs in their endeavors with finances and taxes and bookkeeping and all of that stuff. So this Tax Tuesday is a time for you to get your questions answered, so you can submit them either ahead of time or possibly even during the live stream. So don't hesitate to leave a comment with a question, and I might be able to get to that and answer it. I only have 3 questions from you guys. And excuse me if I'm looking the other direction because my questions are on the other screen. So I'm going to go ahead and jump in on these. Some of them have a couple of components to them, and I will try to answer them to the best of my ability. So the question is, at what income amount would it benefit an independent contractor to use an S Corp? So I'm thinking I'm going to hit $100,000 this year. So this is kind of a loaded question. S Corp is not about your revenue, it's about your net profit. So let's review that together. So revenue, or also called income, is what you're earning. So that's what you're taking in. That's the top line, right? What you're earning. But you also have all these expenses. So if you're saying that you're going to make $100,000 this year, is that your revenue, or is that your, revenue income, or is that your net profit or your net income at the bottom? So you would have $100,000 of revenue at the top. Maybe you had $50,000 of expenses, maybe only $25,000. And so that brings your net profit, if you had $50,000 of expenses, to $50,000. If you have $25,000 of expenses, to $75,000. So that's your net profit. So I like to say that S Corp is not really worth it until you are at about $75,000 net profit. So that's your revenue or income minus any expenses you have to run your business. And that's just kind of a general. It can vary according to situation, individual situation. If you have kids, if you have other income, different things happening. I do tax planning for this specifically, but just keep in mind an S Corp has a bunch of other responsibilities and has separate tax filing. You have to run payroll. I mean, there's just a lot more complicated things to go along with that. So I try to educate and make people aware of that. And I actually have a blog, and I'm going to share it with you here in the comments. And that will kind of go over the responsibilities. So yes, you might see some tax savings when you hit 75,000 of net profit. Remember, net profit, but you have to weigh the other responsibilities, and it's not for everyone. I like to see proven revenue streams. So year after year, if you're growing, that's great, but don't do it just one year you hit the revenue numbers, because you can't go back. You can't undo it. If you undo it, you just become a corporation, and it's a whole other mess. So just be aware of that. Yeah, so there's no real magic number. I've actually heard some accountants, go lower, so 50,000. But it just, because of the extra responsibilities, I don't really see it worth it until you're on that growth path. So I hope that answers that question. Let's see, question number 2. I'm a full-time RVer working remotely as a contractor, 1099 contractor, domiciled in Florida. The company I work for is in North Carolina, and I'm currently in California. Where do I pay state income tax? So this is, again, multi-part question. So if you're a contractor, okay, a 1099 contract worker, wherever your business is located. So if you're domiciled in Florida and you're a sole proprietor, you're most likely that business is also in Florida, because it's being reported on your income tax return, your personal 1040. So if you're a sole proprietor, contract worker, so your income is reported on your 1040 on a Schedule C. So you're creating that income and expenses. So you're not an employee. So a 1099 contractor owns a business, and you have to file Schedule C as part of your 1040. And if you're domiciled in Florida, Florida has no income tax. So if you're reporting that 1099 income and expenses on your 1040, there's no state tax. Simple as that. If you're working in a specific location, so doesn't matter where the company is located, right? So the company who's paying you doesn't make a difference where they are. If you're a 1099, contract worker, it's already reported to your company, your business, wherever that happens to be registered, and wherever you happen to live, which in your case would be Florida, domicile in Florida. So yeah, and I have another thing I'll share, because this isn't, you're not really working in multiple states, but if you do work in multiple states, there could be possible taxes paid, or tax returns are due. And I usually see this with traveling nurses, sometimes, camp hosts that are receiving W-2 income. I've seen, contractors, so like electricians, or, doing some kind of physical labor, engineers, where they're physically going on site and working in a location, and then you owe state taxes. So even if you're domiciled in a place like Florida that has no state taxes, or you're domiciled in, Texas or something, and if you're working in Minnesota or Montana or New York for the summer as a camp host, then you may owe state taxes to those states. So just be aware of that. So I'll share that other link there. Again, if you're just popping in, please share any questions that you have in the comments, and I will hopefully get to answer them. This will be a short session because I only have one more question from you, and I would love to answer more, and I would love to give you as much knowledge as possible. But so going on to question number 3. Can you clarify the rules regarding domicile and state taxes? We're kind of in the same question here. So if you're domiciled in Texas, but you spend a significant amount of time in a state that has state taxes, am I required to pay those state taxes? What if I own land in a separate state? So this person is using Arkansas as an example. Do I need to pay taxes to the state? So state taxes to Arkansas. And then lastly, are there cases where you officially change your domicile state, or can you keep any that you want as your domicile? So we're really talking about domicile. So domicile, I just want to clarify, is actually a legal consideration. Yes, there's taxes involved, but you have legal ties to a state. So domicile means, where you get your mail. So where, if you have a mailing address, so, if you use Escapees or some other mail service, whether that's in Texas, whether that's in Florida, or South Dakota, or a different state, it doesn't matter, that's fine. Then you're declaring that your domicile. So that's where you vote. That's where your RV is registered, your auto is registration. That's who issues your driver's license. So these are all legal things. These are not really taxation. But the benefits of picking one of those, right, is that they're income tax free. So the other things to think of when you're doing this is health insurance, even banking, which a lot of us do online banking, so I don't see that as a huge issue, but where you have doctors. So some states, if you keep your doctors, like if you leave New York and you try to move to Florida and you keep all your doctors in New York and you come back every year, New York is going to say you still have ties to them. So just be really careful with that. And as far as owning land, depends, are you renting that land? Is it just that you own the land? Yeah, you have ties to that state, but that doesn't mean you're living on the land year round, and making that your home base. So if you buy land with the purpose of putting your RV on it and living there, 365 days or whatever, thereabouts 300 days a year, then yeah, you actually are a resident of that state. It's not a domicile thing at that point. It's actually a residency state status. So yeah, you can pick any state that you want for domicile, which is why people pick Texas. That's why people pick Florida, South Dakota, those no income tax states. But that doesn't mean you have to. If you're going to have a family member, help you with mail and forward things, that's fine to keep where they live, whether that's Ohio or Minnesota. It doesn't make a difference. I'm just picking states off the top of my head. So yeah, as far as owning land, it doesn't really matter unless you rent it. So that's why I say you still have state tax ties if you own property or land that is rented and you're earning money from the land, then you would owe state taxes to that state. But as far as just owning land, that does not give you a tax obligation. You have to be making money there. But again, if you live there full time, if you put your RV on that land full time, and make that your home base, now you are a resident of that state. So that we're moving from domicile to residence. So that's your residency and your domicile can sometimes be intermingled, but I like to use residency as in like you're spending time there versus a domicile, like you're picking it, for convenience, really, right? That's why we pick these income tax-free states. But residency is usually over 180 days or 183 days. So that depends on how long you're spending on your land. If you just own the land and it just sits there unused, then no, there's no state tax, no state taxes. As far as traveling, I'm just trying to read this question over again. But you spend time in states that have state taxes. So it depends. What are you doing for work? If you're a W-2 employee, your employer should be withholding taxes based on your domicile or residency. So if that's Florida, then they should be withholding taxes as if you were living in Florida with that Florida address. If you're a business owner, the same thing. I kind of talked about this in the first question, and that your business income is all reported to your personal tax return, and wherever you live and wherever you're based. So contract workers still, you're not going to be paying every time because you're not physically going to work in all these states. Like you're not going into a hospital as a nurse, right? So those are the exceptions. Nurses, I think I went over this already, but the other exception I see is somebody who might be doing like shows or festivals, in which case, again, you're physically setting up a location in that state and collecting income or earning income in that state. So those are the times when I see exceptions to the rule. But otherwise, in general, someone who's traveling around, your domicile is where you're earning your income if you're a business owner, or wherever that business is registered. It should most likely be the same as your domicile state, but it doesn't necessarily have to be. And if you're a W-2 worker, then you're being paid as if you were living at the address, whether that's Florida, Texas, South Dakota, Minnesota, New York, it doesn't matter, whatever the address you give them, that's how they should be withholding taxes. I have seen exceptions to that rule, and some companies make their employees share their travel plans. And if they spend so much time in a state where that company has offices, they may withhold state taxes. So there are exceptions to that. But in general, I don't see that you're going to be paying, if you move to 10 states, like you should be paying taxes to all 10 states as you move throughout the year. That's not feasible. And it just doesn't make sense to me. If you're spending, a year, like you buy a RV plot in Arizona, let's say, and you spend 6 months, then you may have some state tax ties there. So just be aware of that. But in general, people tend to not spend the amount of time required. Each state has different rules on this. And some states it's 180, 183 days. And again, it's based on where you're earning your income and how you're earning your income. So it's kind of a loaded question and individualized answers, but I hope that gave you a general answer. And that's it. That's all I have for questions today. I would love to get some more questions and be on here and give you my time. If anyone has any, please drop them in the chat here or leave a comment. Otherwise, I'm going to sign off because I'm not going to waste your time. And yeah, I'm surprised. Usually I get a lot of business questions about LLCs and things like that. So if you want, I could just start talking. I usually get a lot of questions around, opening an LLC. What does that mean for taxation? Let me see. Any other questions? Anybody? Okay. The other thing, that I wanted to look at was, I know we were talking a little bit about S corps and LLCs. And an LLC can elect taxation of the S corp, and I know that's what that person was asking, is what point is it worth becoming an S corp? So just let's back up and kind of go through what that means. So an LLC can be either a single member or multi-member. If an LLC, so LLC stands for limited liability company, and it is a state registered entity level. So it is not federally recognized. So the federal taxation rules around it are single member LLCs are treated by default as a sole proprietor for taxes. And as I said, that's put on your 1040 and on a Schedule C. So that's if you're an LLC, you are a sole proprietor, single member. If you're multi-member, including husband and wife in most states, community property states is the exception, and a multi-member LLC by default, a partnership. A partnership files a separate tax return. So just be aware of that. So single member LLC, sole proprietor, multi-member LLC, partnership. And then, as we were talking about earlier, you can elect taxation to be an S corp. So when your income level really hits those numbers and really makes it worth it, then yes, you're going to see some tax savings, and it is definitely worth becoming an S corp. Just be aware of the changes in bookkeeping, the extra tax return, the paying yourself a salary, all of that extra stuff. So payroll, there's lots of obligations. So that's just the basics, and I get that a lot about S corp, LLC, and I feel like there's a lot of misunderstanding about LLC, what it means, and what it does for taxes. So again, taxation is sole proprietor, partnership, S corp. Those are really your taxable entities, and an LLC falls into one of those, right? So if there's no other questions, let's see. I did see a question come through here. Let's see. Is it better to register an LLC in your home state or the state that rentals are in? So what kind of rentals are we talking about? That would be my question. That most likely, it depends on, are we talking about RV rentals? So if your RV rentals are, let's say, located in California, then yes, your business should be in California and should be registered there. And the same thing, even if you have an LLC for a home rental. So if you leave your home behind and you want to open an LLC to run that, real estate rental through, that should also be in that state because it's physically located there. So a lot of times I see LLCs where you're domiciled because you're doing an online business, so virtual business. In that case, it should be wherever you're domiciled, but there are exceptions. So yeah, a home or a duplex. So it would be wherever the home is located. So I covered both those circumstances, RV rentals and home rental. As far as structuring, rental real estate property, I would definitely talk to a lawyer to protect your assets. But as far as where it should be registered in that state. So, because that's where it's located. If there are no other questions, I am going to sign off for the day. I appreciate everyone being here. And if you're watching this at a later date, I hope this is helpful, and I hope you'll join in live another time. I would love to get more questions. I know we're coming into tax season, so feel free to get us jumpstart, right? Get your questions answered now instead of rushing and procrastinating, or not procrastinating, but rushing and just feeling stressed in the thick of it. So otherwise, have a great rest of the day, and I hope to see you all next month. My December date is December 6th, I believe. So same time, 10 o'clock Mountain Time, and I hope to see you there. Thank you.